Welcome back to Invest Global. Today we'll be looking at the charts for silver, gold, and oil, three commodities that I really like to look at to help gauge what's going on in the macroeconomy, especially with oil. As you understand, with the petrodollar system, oil actually fuels a lot of the economy. And typically when we look at how I structure my day, the first things that I look at is 10-year yields, the 10-year yield US Treasury. Typically, as it's more stable, it's stock market positive. Then the US dollar index, the DXY, the Dixie, as that goes more negative or more towards the downside with US dollar index, it's more positive stock market and kind of everything in the macroeconomy. And then it's kind of the opposite with oil. So as oil rises, as it's been in this pattern that I showed you in a previous video, and kind of in this rising wedge pattern, as it continues to rise up, that is a stock market positive. So oil is truly the I guess you could say the lifeblood of the military industrial complex. I don't want to get too political here, but I personally think silver and gold are incredibly undervalued. I've been definitely, I'll just tell you this, doing a lot of research and a lot of investing into these commodity producers. Especially earlier on. Now I still think they're incredibly undervalued. It's really the only thing that hasn't really popped off. I mean, silver just moved, $2 up from this $25 historical level. And I think that's important to always zoom way out on each of these charts, right? So you always want to take the macro view on this. You want to go, okay, what's the longest price history we can possibly have, right? So this is what we have for silver is we've seen kind of for the longest time, just in like the 50s, right? Like a long, long time ago, it's pretty dang steady around there, around like $1 to 62 cents. Then we finally got that move up towards $1. That was like this mini run, another little mini run up to $6, then fell back to that $4 mark. Then had this massive parabolic push up to $48. And that's kind of, we're using that level as a nice little piece of resistance because then we got smashed down, nice little bull market here, just like, we see in these crypto bull markets, bear market, my apologies. This kind of bear market sustained right here. And then right as it kind of picked up in 03, we moved into 04. Then, what happened in 08, right? That big crash right there. Okay. So then afterwards, we kind of saw this massive push up past those highs, but still around that level, right? Like I would still draw this with all lines. By the way, I talk about this in Global TA. The most recent one was recorded on an advanced advanced patterns and advanced indicators you can use. But always keep in mind that whenever you're doing technical analysis, it's always a range, right? It's never an exact line. The reason we draw these lines is basically to represent a range. So as you get more advanced, you don't need to draw these ranges because you can kind of just see it as you're looking at the charts. But maybe when you're starting out, you can do things like this. So instead of drawing these key support and resistance levels like a line, you can do this, draw them as ranges, right? So this is kind of how you would do it. Just as a quick example, and then we'll move on. So this would be like right at the top. This would be like that kind of bottom support level. So if we ever, did a massive crash in silver, which I don't really see happening because it actually has a use case and it's a very, very nice commodity. I'll just say that. Typically what we see is a run in gold historically, and then in silver. Silver kind of lags along, just like Bitcoin and altcoins, right? Like as Bitcoin pumps, altcoins kind of drag along, but then as Bitcoin dumps, you see that kind of dominant switch and some of the flow move into altcoins. Similar with gold and silver, a little bit of a different dynamic, but you get the point. So let's take a little bit deeper look. Okay, what exactly has been going on at these levels? Okay, so I would draw this out again if you're a beginner and you're just doing a technical analysis like this. We see these levels of confluence right here, right? So you see this level right here, and then kind of what happened here. So I would draw this kind of level right there. So if we fell from where we're at, I think the furthest we would drop is this 20 level because it's a historic level of support. Going all the way back to '01. We can move this back right here. But it's very, very unlikely that we will go back down to these lows at like $5. If we go down there, I'm just telling you, I will be backing up the dump truck on silver. I will be purchasing a lot of silver. So let's just see. Boom. By the way, if you have any questions throughout this video, just let me know in the comments. I really like talking about commodities, but I know with the crypto bull run, people are really, really interested in cryptocurrency and blockchains. So I try to focus on quality projects in that space and do a lot of content on there. But this channel is really about global investment strategies. So it's about emerging markets, about commodities. It's about emerging markets in technology like crypto or blockchain and fintech, all these different things. But the main thing to keep in mind here is silver is massively undervalued, in my opinion. I mean, the price has been suppressed. Companies like JP Morgan have literally been fined ridiculous amounts of money for kind of manipulating the price, actually hurting their clients. If we move into these daily charts or even 1 week, we can see this a little better. What kind of this pattern has been in, kind of this ascending triangle pattern that we've been in right here. After we push out of these levels, in July of 20, we saw this massive push up there. Then this kind of dump, we kind of saw a little bit of consolidation in these levels, but overall, it's just kind of been this this ascending triangle, and really, I mean, this can go all the way till really into 2020 or 2022. I don't personally think that's going to happen. What I really think is going to happen is whenever we see some sort of kind of crash in the economy, which if we keep getting stimulus, it might be continually delayed. But if we do see this big crash in the economy, we see stocks plummet, kind of like that March crash. First of all, I'll be buying a lot of things. Second of all, I think commodities will do very well, especially gold and silver. They really haven't had their run. And so that's basically all for silver. I don't want to spend too much time on one individual. Moving on to crude oil. So again, let's just zoom out, right? So I'm not sure if this individual chart has a ton of data. But they have data back to 2016. You have to keep in mind it's always futures with oil. It's futures with all these, really, what we're looking at. But, actually, this is spot price. Yeah, with silver, it's spot price. But you understand the point. With silver and gold, I prefer bullion or, if you're going to trade it, obviously, being a commodity trader is very advanced. So I'd be very careful. You can trade futures. But for just basic, I would say bullion, physical gold, physical silver is very powerful to own, custody yourself, or store in a vault. Especially if you're storing larger amounts, I recommend a vault. Do not buy these like collectible coins because they're just going to overcharge you. And to try and find like a good bullion dealer so you can get good deals. One Gold is a platform that allows you to do this, and they'll send it to you. But I prefer kind of in-person brokers. So let's see here. What exactly has been going on with oil? We saw these crazy dumps before, but now oil has kind of been a little bit stagnant, right? So it's just kind of been in this, I guess you could, here, let's draw it out real quick. This pattern right here, which is kind of a strange one, right? So it's kind of this falling wedge, in a way, kind of this falling channel, but it could be a little bit of a fake out as well, right? It could be like this. So this is kind of how I'm looking at what is going on here with oil, because if we use some indicators here, like let's just say we pull out the Bollinger Bands or the EMA ribbon, we're a bit overextended, right? So we were a bit overextended. If we touch here, retest, I think we could be seeing much higher highs, especially as more stimulus things get passed. Oil overall, like I said. Let's see here. Oh, shoot. My apologies. I'm in the gold chart. Okay, we can just focus on gold. I do apologize for that. I don't know how I got those switched around. But the point is here, for gold, we have been in this descending wedge, right? So we've been in this descending wedge. It looked like maybe descending wedge is, by the way, bullish pattern. Again, I talked about this in Global TA, Global Technical Analysis, the free TA course, helping you trade in capital markets. All of it's 100% free. No upsells. People are charging thousands of dollars for information like this, and I just wanted to make sure everybody got access to it. So right here, what we could potentially see is just a fallback into this pattern. So potentially we could just see this fall back into the pattern, maybe kind of retest this bottom of the Bollinger Bands, maybe pop up a little bit and kind of have a short-term, nice little maybe push back up. But what I think most likely, like the bullish scenario, will be, maybe we retest this one more time, but you have the confluence of this line right here, right? So this kind of top line in this descending wedge. Also, you have these EMA ribbons, which are kind of like waves, right? So I like to describe it kind of like water. Like think about it like a jet ski, right? So you're bouncing in and out of the water, bouncing in and out of the water. And when you're on the negative side of it, you're kind of drowning, right? So you can't quite get up. You keep getting pushed down. And then once you finally break above it, then you start bouncing up, then you start bouncing up, then you start bouncing up. Hopefully we see another bounce up here. So if we did see that, another little bounce up there, I would be targeting these levels here. I'll just do a little retracement to show you how I would target this. But let's do a little fib retracements, and I'll break this down. Sorry about that. Fib retracement, I always forget where this is at, even though I use it literally almost every day. Let me go here. So this little fib retracement down to those lows. I would be looking at these levels right here, to be quite honest with you. I do not think we are going to go back up to that. In the short term, this is what I would be targeting, right? So you could say the top of the wedge, like you could say right here, but to be a bit conservative, I would potentially set up a little long position. let's see, where would I want to set it? I would want to set it after the volume confirmed breakout out of this. So we'd retest this and kind of use that as a little support level. So potentially right there. Whoops, sorry about that. I meant to set a long position. Right here. I would set a real tight stop loss, probably around there. But then be targeting like either these levels, maybe take a little bit of profit and then go to this level. So that's about 11%. But again, in the macro for gold, what we've seen here, and again, I do apologize on that kind of confusion with oil. But yeah, we can move on there. I won't spend too much time on the historical charts, but let's go over here to oil. I don't know how I got switched around there. I thought I really had oil on my chart, but somehow I got flipped around. So the point here is we'll keep on trucking. So you have to remember these are continuous futures for oil and gold. There's many different charts you can use, but that's just one that I was using for today. Don't get too upset, if that's not the chart that you use. So the point here is let's see what's been going on here with oil. As I had kind of laid out, is we're in this kind of rising channel pattern. Price has just basically been consolidating in here, and it's just kind of getting to these levels where it's like, okay, if we don't have a breakdown, I mean, if we keep having the stimulus, again, you have to keep in mind these kind of macro trends, right? If we don't keep having the stimulus, what I could see is these levels. So let me just draw this out right here, historical lines. So these are kind of our base levels, right? So we have those levels, we have these levels right here, we have this level. Again, this is just drawing out support and resistance lines. I'd maybe do it like there. I like that level. So what you're looking here for is multiple points of confluence. And remember what I said, it's always a range, right? So you can, now I'm not going to draw it as a rectangle for you because I hope you understand what I'm saying. Like you always want to look at the charts as a range, never an exact point with technical analysis. So let's go back here. Maybe we could do like that level just because right there we kind of got rejected. We kind of had a little bit of weirdness going on there. And let's just draw this out as a little bit at the top. We can also do this level as well, but then you get the point. So using this kind of technical analysis, what we could see is a little bit of a retest here. So we could see a little bit of a pushback down here with oil kind of in the short term over the next couple of days and kind of push down maybe to these levels, maybe retest there, shoot up a little bit, kind of move towards the upside, get rejected. Here, once we see kind of a breakdown, this is where I would be looking for a potential short position on oil, but I do not necessarily think this is going to happen personally. I do think they're going to be kind of forced to stimulate the economy more. I think this is going to be positive for equities, especially in developed markets. Emerging markets don't really gain a lot of upside benefits off this because they're not really in control. You have to think about, okay, who is currently in control? Well, the United States has the global reserve currency with the petrodollar system and all these different factors at play. It kind of creates for this environment where they can do things like this. So it's basically all for this video. I just wanted to break down some technical analysis here with silver, crude oil, and gold. That's all for this one. If you enjoyed it, like, subscribe, button all. Join the Telegram group where it's like-minded individuals talking about global investment strategies. Link down below for that. Check out Global TA as well. Link down below. That's all for this one. If you enjoyed it, like, subscribe, button all. Invest global, and until next time.